Hello everyone, I'm Dr. Stock, and this video is for entertainment purposes only. Today I'm bringing 3 different stocks to you. I think that they have varying levels of risk to them. One of them is a growth stock, so it could see some continued pain over the first quarter or two of 2022. However, I think that we have some strong catalysts and that we have some things to look forward to that I think a lot of the risk has already been priced out. And if it does drop further, I think it's going to be an increased buying opportunity for us. And moving on from there, I have another stock for you that I think is a little less risky but has significant growth ahead of it. And so that is also another one that I think we should check out. And then finally, I think the one is the safest that we have, especially during the first half of 2022. I don't see a lot of downside. I think that there's a lot of positives to go along with it. And even though it won't show you the rampant growth most likely that you would get with some of the growth stocks, it also doesn't have that huge downside risk that some of the other less established or not even yet established companies do. So with that said, stick around and let's get ready to rock. Welcome back. If at any point in time you like what you see in this video, go ahead and click that like button. And while your eyes are down there, if you want to check out that description for some of the referral links that I have for Moomoo and Webull, you can sign up, deposit your money, get your free stocks. I also get free stocks for the referrals, so check those out. And then also, if you want to hear more of what I have to say, there's also a Patreon link down there that you can click on that link, head on over, and check out what I have over at the Patreon, including my portfolios and my private Discord. With that said, let's move right on to the stocks. All right, the first stock that I have for you is SoFi, ticker symbol SOFI. And when you look at this one, you can see the wild ride that I had. This is some serious volatility coming for us. And more that recently, we've really dropped down through support. So this one yesterday had a low of under $13. I was able to buy, I think I actually took more of a position on this one under that 13 mark. So I ended up catching a significant bottom, I believe, from yesterday. I think that despite the different FUD that we have regarding this company and the news that we have regarding this company, we still have the Super Bowl most likely taking place at SoFi Stadium. I think that'll be good for exposure for SoFi. I think that that'll be something as a revenue driver. And I think that they're on their way to growth. The banking charter, I think we're looking for sometime during Q1 or Q2 of this year. So we'll see if we do have that come through the OCC sometime soon. If we do, I think that'll be a major catalyst that pushes us back through, at least brings some momentum back to the stock that we see right now. If we take a look at tip ranks for SoFi right now, it has 6 buy ratings, 2 hold ratings, and an upside of about 81% up to $24 per share. This, I think, could use a little bit of updating. I think it may have pulled back from that $24 mark now. I want to say, I'd be more comfortable with like $20 to $22, but who am I to say against the professional analysts that are out there? I think that when we get those updates and we get those revisions, especially in the markets with the Fed tapers and with the bond buying and the rate hikes that we get, I think that it will be a little bit lower than what we see right now over the next 12 months, but we'll wait and see what happens. We still have at least a 50% upside, and I think a lot of that can be realized on the momentum of the announcement of the approval of a banking charter, which should bring a huge amount of revenue to their top line, and that should translate well to our bottom line over time for SoFi. So this is one I think is the highest risk play that's here. I think it is worth a lot of attention. I do have a position in this. I have dollar cost average over time. And if we see significant pain in the markets, such as maybe an S&P sell-off, NASDAQ sell-off, that we come off of those highs and we get that 10%, 15% correction, depending on where it's at. And remember, this is a relatively high beta stock, so this is going to react significantly to a drop in the overall markets. This is one that I think would still provide us buying opportunities, and that as that price drops, that it's less and less risk that we have in that, and that we can experience more upside over time for SoFi. So let's decrease risk from there. All right, the next company that I have for you is Disney, and you can see this little W shape that it has that we find significant buying at about $140 to about $145 per share. Now, for Walt Disney, this drop-off that we see right here, I believe, is attributed to the subscriber growth slowdown that we have for Disney Plus. But as we are rotating out of the pandemic, are learning how to deal with the pandemic, whatever your viewpoint is on that, I think that Disney is learning a new way of life as far as Disney Plus goes, and I think that they're going to increase their offerings. I think that they're going to expand what they have. Park reopenings, we also have to look forward to. I think that we're going to see a lot of progress out of Disney, because over time Disney has known how to innovate, and I think that they're going to continue to be innovators in their space, and that they're going to look for ways to continue to push through for that. So Disney, I think there's a lot less risk than what we would have with SoFi, because SoFi, we don't know if they're going to make it. We just believe that they will. Walt Disney has made it, and now the question is, will they continue to be able to make the growth that they have already experienced? Are they going to be able to pick back up where they left off? What else is going to bring in that money? And trusting Disney to do what they can do with their deep pockets to innovate over time. I think that this will return well to the shareholders. If we look at what TipRanks has to say, TipRanks is reporting about a 25% upside, almost to $200 per share, and right now the last price that is reporting is $156 per share for Walt Disney. So this one I think is a lot less risk. We're still counting on that either return to the subscriber growth, or we're counting on that new line of offerings that they have, or the expanded line of offerings that they have through Disney Plus. We're counting on park reopenings. Also, I believe that metaverse could also be a huge thing. I would guarantee you that Disney is absolutely looking into stuff for the metaverse to drive further experience for the demand for Disney that is just worldwide and incredible. So Disney, absolutely like it as a company. I have a position in Disney as well. It's a smaller one that I'm building in, but I want to bring a little bit more safety into my portfolio, so I have branched out to Disney. Let's move on to what I think is even less risk, and something that should do very well, especially in the first half of 2022, and continue to perform strongly after that. And even though it might not have the same rampant growth as what we might have for SoFi, and might not have the same upside potential as Disney, this is one that I think is a little bit safer of a guarantee for us. So less reward, but probably a more guaranteed reward than we would have for like SoFi, or even a strong company like Disney. So the last company that I have for you is Goldman Sachs, and you can see this slow, steady curve that we have here for Goldman Sachs, and you can see that it has traded sideways, sort of leveled off over time, and right now we're sitting on the 50-day. If I zoom in here, we came all the way down to the 50-day moving average that I have on here. Opened just over $400 per share, closed just around $400 per share, just under it. So like a $2 movement. So almost nothing at all to worry about, like 0.5% movement on a day yesterday. It was very tumultuous in the stock market, but reacted, this is a stable company. This is one that should do well for us. If you looked at the bank stocks overall, Goldman Sachs is absolutely no exception to them. This is one of the champions that we have in the space. And also on top of that, if we look at what we have for Goldman Sachs on TipRanks, right now, despite the fact that they're still a $400 stock, there's still about a 20% upside as per the average analyst rating. So if we move on from the lowest price target is 416. So right now we still have a 4% upside to the lowest price target, and then the average of 477, like I said, taking us up almost 20% from where it's currently at, the high of 576. That'd be a very, very bullish case. So not only do we have that upside appreciation potential for Goldman Sachs in an environment that should do well for banking stocks when we have the slowdown of the bond buying, but we have the rate increases coming from the Fed this year and into next year. Goldman Sachs should be a big part of that. But on top of that, they also offer a 2% dividend. So when we look at that dividend, this is pretty much, if you have a stock without a dividend, then you're just worried about stock appreciation. If you're bullish and looking for that stock to go up in value, for Goldman Sachs, this could trade completely sideways and you would still get 2% on your money. So not only do we get the stock appreciation, but we also have that dividend yield to also further buffer our opportunities or increase our opportunities for a return. So Goldman Sachs is one that I do have in my dividend portfolio, which is available over at the Patreon. You can check out that portfolio and others by clicking that link for the Patreon down in the description, so you can go over there and check it out. But Goldman Sachs is one that I've held on to. I think my position, this my dollar cost average, is around $300 per share. So not only am I up 25%-ish on my position in Goldman Sachs that I took in February of last year, but on top of that, I've also been collecting the dividend every quarter that it comes around. So let me summarize. SoFi, the biggest risk play that we have, the CPI data on Wednesday, could really be something that could squash down the markets, or it could be something that could take a little bit of pressure off the markets. But even if the CPI data does turn out relatively well, we still have a hawkish Fed that's coming out, slowing down the bond buying, and also increasing the rate to try and combat inflation. I guarantee you they're going to take whatever action they can, even if their action directly doesn't impact inflation. As long as inflation is being tamed and coming under control, then they're going to count their acts as being part of that. So this is something that we most definitely want to watch out for the growth stocks, for companies like SoFi, because it can be pretty bearish for their price. But when it does hit bottom, and I think right now we have a significantly reduced price over what we had, a lot of de-risking, it still can go lower, but it does offer incredible upside. So really, it depends on where you fall for that. Disney, I think Disney, while it might still be affected in those ways, it is an established company and it's going to have less of an effect. And we saw less volatility in their charts. And this is one that I think that they will come up off their lows, and I think that we're going to see them rotate very well through future markets. And I think in their space against their peers that they have a lot of legs up on their competition. And then finally, Goldman Sachs. Goldman Sachs, I think, is just an absolutely astounding, incredible bank that knows about growth and stands to do well in this environment, being that it is one of inflation and also the rate hikes, which should serve banks well. And Goldman Sachs, I think, is really going to capitalize on this environment through at least the first half of 2022, and then still benefiting throughout the rest of 2022, but I think that really versus other types of stocks that are out there, other industries, other sectors, banking is one of the big places where it's at, and Goldman Sachs is definitely one of the leading companies to go for that's going to offer you relatively good stock appreciation and also has a modest dividend on top of it. So thank you guys for watching this video. Remember to check out those referral links down below. Click the like button if you haven't, especially if you really do like this video. I appreciate it. Throw me a comment. Let me know other stocks that you're interested in, other areas of the market that you're interested in. Cryptos, I absolutely love crypto as well. I read a lot about it. I read about it all the time. Tell me down in the comments absolutely anything that you would like me to know, and I'd love to hear from you. I'd love to get back to you as well. Let me see. There's something else. Oh yeah, that Patreon link that's down there. Click on that. Come and join the community that we have over there, and I'll see you over in the Discord when you do join. And then last thing, I'm Dr. Stock. Thanks for rocking with me, and go get that money.